Well, today on the Practice of the Practice podcast and live here on YouTube, we have Jeremy Zug. I almost said Dr. Jeremy Zug. You seem like you should be Dr. Jeremy Zug, even though that's totally not true.
Talking about Dr. Dre, but I'll take Dr. Jeremy Zug.
The Zug is in the house. Jeremy is the co-owner of Practice Solutions, also our in-house consultant around insurance and billing and credentialing and all those things that I have no desire to be an expert in. So Jeremy Zug, welcome to the Practice of Practice podcast.
Thanks, Joe. Thanks for having me on again.
Yeah. Well, we are doing a 5-part series over the next week or so, and we're going to be covering a number of different things. And I'm going to actually go over what we're going to cover in all 5, just so people know where we're headed. And then they'll be sucked in, and then we'll dive into today's episode. So today we're talking about the biggest myths in insurance. And then in episode number 2, we're going to be talking about insurance terms you have to know. Then in 3, we're going to talk about fraud, audits, and not screwing over your business. In the episode 4, we're doing tech in billing to save time and money. And then last, we're wrapping it all up with your billing plan. So that's where we're headed, folks. And if you're watching this on YouTube, just make sure you watch those in that order because they kind of flow together. But if not, then that's totally fine too. So biggest myths in insurance. Jeremy, where should we start with this?
I think we should start with I can only practice in the state that I live in, right? I think that there's been a lot of interesting information around practicing across state lines, and the fancy word there would be reciprocity. It's a big fancy word.
Reciprocity.
Reciprocity. For your credentials, or your credentials in relation to your licensure and education being valid across the state line and being in network with insurance. And one of the biggest and most meaningful examples of reciprocity in the United States at the moment has been Alaska. So you can, I guess it's more of a case study, right? I work with a client that provides telehealth services to Alaska, but they live in the lower 48, right? Now that was a big deal because Premera, or Blue Cross Blue Shield of Washington, was flying mental health patients to Seattle when they needed certain mental health services like psychological testing or therapy, right? And so they'd much rather pay for a telehealth service than an airline ticket, right? So the idea that you have to stay in your state, in your sandbox, is not necessarily true anymore.
So what are just a couple things to consider with that? I imagine licensure in that state. Because that's what our code of ethics, or most codes of ethics, require. What else do they need to do if you're going to start telehealthing in Alaska?
Yeah, so a couple big items. Obviously, licensure, making sure that you're licensed in that state according to their requirements, and then getting credentialed in that state, right? Because let's say you were in Illinois, but you want to provide telehealth services to Alaska. You cannot say I'm in network with Blue Cross Blue Shield of Illinois and then bill, Blue Cross Blue Shield Washington or Premera and expect to get paid. So you have to be credentialed according to that insurance company. So you want to make sure that you follow that process to a T. The other thing you want to make sure, and this is really critical, and I think we'll cover this later, but you want a platform that's a HIPAA compliant telehealth platform, and we can make several recommendations there. I know some electronic health records have it built in already, but we'll get there as far as tech and billing. But those are really the big items that you want to keep in mind.
All right, so myth number 1 is you have to keep practicing in your state. So what about myth number 2?
So myth number 2 is really the timeline for credentialing. I hear this a lot, and it's concerning, but credentialing is a long process. Right? Insurance companies process applications as they're received, and very infrequently do applications get processed within 30 days or 15 days or even 60 days, right? So what we're seeing is the trend data around the timeline for getting in network with an insurance company hovers around 90 to 180 days. And there are a couple of reasons for that. One, there's a lot of mental health providers that are just entering the field. The industry is growing at an exponential rate. But the other part of that is insurance companies are not really concerned, or they're not really worried about fast tracking your application. So let's say you start out in private practice and you go to apply to a panel, but you don't have a 3 to 4 month reserve of cash in the bank. I would not depend on your insurance application or your credentialing application getting processed in 30 days. So I would make sure you have enough in the wings to make it until your application is processed. But that timeline that insurance, is fast or effective or efficient, as far as administrative processing, is not always true. So you want to sort of hope for the best and plan for the worst.
Yeah. So could someone that's just getting going submit their applications before they have an office, so they don't have that ongoing expense, or do they need you to have your physical office and all that set up?
So if you in theory knew where you were going to practice, for sure, you could enter that address on your application, right? So you could do it ahead of time if you were absolutely sure that that was your practice address. A lot of applications will ask for your practice and then home address. Some will just ask for your home address. So it really depends on the application itself. But yeah, you're right. In theory, you could get a jump on it if you knew where you were going to practice.
Could you just do a change of address form later, or is that harder within?
That's a good question. Change of provider information forms are pretty simple. And now with electronic portals, each insurance company has their own online system that you can manage this information. It becomes a lot easier. So that's certainly a consideration.
Yeah, I mean, that intentional bottlenecking, I think, just saves them money and means that they're not providing as much services and gives them more profits.
That's exactly right. Joe, are you seeing that a lot of providers are finding office spaces before actually getting a key to getting to that office?
I mean, I think right now, at least what I'm seeing is that the market is more in the landlord's favor. And so even mental wellness counseling, when I sold that in June of 2019, Nicole, there were 5 clinicians kind of not fighting, but all wanting the same space. And, a friend of mine who's a different clinician ended up getting the one that she wanted. And then, even the space that they got, that's this beautiful space, the landlord kind of was like, I don't really need to negotiate with you. I have like people lining up that want this space. So if you want it, like, here's what the cost is. Okay. And so I don't know if that's just unique to Northern Michigan or, but as I'm talking to, especially our next level practice membership community, people are finding landlords are less and less likely to negotiate. But I think the subleasing space, because people then get in these leases and they aren't full, oftentimes there's a lot of clinicians out there looking for someone to sublease. And so I'd say for people just getting going, especially knowing now, 180 days, half a year, like that's nuts. So if you could sublease and have it be based on what you bring in, or even just a lower amount, where you say, okay, I'll rent 1 day a week, maybe do private pay for half a year and really build those skills, which are good to build anyway. That then would keep someone's risk way down if they're just getting going.
Right, and then you can always say, like you said, you can submit that change of address form. I mean, providers change addresses all the time, right? Therapists change locations all the time. So insurance companies are pretty used to those, and those tend to process much quicker because you're already in the system and you're a known quantity. So that's certainly a better strategy for sure than taking it like really segmented. You want to overlap your processes a little bit.
So practicing in other states, you know what, we actually have a mutual client, someone that was in my mastermind group, came to Slow Down School, that she practices from Mexico? And she does online counseling with her whole practice where she wants to live. And so going back to your first myth, I mean, that's just an example of living where you want to live, but then, getting kind of the big city prices.
Yeah, and I think it's important because telehealth is starting to really develop, right? You're really starting to see the technology for telehealth and the capabilities start to match insurance company policies. So you're starting to see that really blossom out. And so I think it's becoming much more actionable and doable to start to imagine, where do I want to live? And then how do I practice in that state, but live over here? So, it's a lot of what you talk about, Joe, as far as reverse engineering what you want your life to look like and be about, right? And billing and credentialing can fit into that narrative. You just have to be really sure about, rules and regulations. But once you're sure about those, then you can execute on that strategy.
Yeah, 100%. I was on hold for Priority Health recently for my own insurance, which, oh my, and but on hold, they were like, instead of going to urgent care, do you know that you could do an online, session with your doctor or with a doctor if you have a medical, like non-emergency, but emergency, like, urgent care level. I thought, if they're getting to that level that they're promoting it when you're on hold,
Yeah.
I imagine it's going to trickle down into therapists a lot more.
Oh, for sure. Yeah, whatever happens on the primary care side eventually hits the mental health side.
Yeah. All
Sure.
right. So what's number three? The third
Number
myth.
number three is an issue that is near and dear to my heart, but it's the idea that you need to be on every insurance to stay full or to get full or to have a successful practice. That is categorically untrue. And the reason why I have a lot of fire behind this one is because I've seen hundreds of practices, if not thousands of practices, that get on every single insurance panel, right? So they come right out of the gate with 10 insurances. And then they end up with, 10, 20, 30. And I even saw yesterday, $300,000 in outstanding claims past 120 days. And now you're stuck in this administrative, mouse wheel, right? Where you're not really making any progress toward your revenue goals. You're not making a lot of progress on the business and you're really overwhelmed, right? So the way out of that myth, from my perspective and from seeing hundreds of practices that take one insurance, right? So typically it's a payer like Blue Cross Blue Shield or Cigna or Aetna, and they build a practice on that insurance. And then like a year or two later, they add another one. And then maybe once that is established, they add another one. I work with a client, one group practice, they take 25 insurances and their aging is under 30 days. But the only reason that is the case is because they slowly, and I mean slowly, painstaking, grew the insurance side of things, right? They didn't come right out of the gate and do 15, 20
They
insurances.
got the system down for one and then added another and another.
And they're one
And
of
then
the only groups I work with that have never had, they've only had the revenue go up. They've never gone backward, ever.
so what's aging mean? I know we're going to go into terms in the next episode, but just because you used it.
Oh, yeah. So aging or accounts receivables is the idea that you submit a claim to the insurance company that should warrant reimbursement, but you don't have that money yet. So, and depending on a variety of administrative glitches, your claims can live, right, in accounts receivable where you don't have that money for a certain period of time. So it's sort of like a KPI, actually, a key performance indicator that I look at to say how much money is past 60 days, or how many claims do you have outstanding past 60 days or 90 days or 120 days. That's a key billing marker for success because it means that your cash flow is good. But if you have claims that are past 4 months, the likelihood of you collecting on that decreases tremendously.
So if they have that many insurances and their aging is less than 30 days, that means they're mostly getting paid within 30 days for services they render.
That's right. That's right.
Okay.
For 25 insurance panels, right? But that's uncharacteristic because they went slow, they were patient, they had the long game in mind. So they had a certain mindset about them that made that doable. But the mindset that I have to get there today or tomorrow becomes untenable or unscalable, unsustainable even for the long run.
I would guess some people apply to be on a bunch of insurances because, I mean, if it's taking 180 days with some to get on, it's like, well, half a year from now, I'm going to want to be on this one. So maybe I should get on all of them right now. And then later on, I can always sort out which one I want to get off of.
Well, that's exactly right. Right. And then they get their reimbursement, their fee schedule, which is the spreadsheet of what you're going to get paid for your services. And your profit margin is low. And then you want to get off that panel. I see that all the time too, right? I want to get on this panel. They get their fee schedule, what they're supposed to get paid per hour. And then they say, I can't keep the lights on at that rate, right? Whereas they could have spent that time building perhaps some private pay patients or some out-of-network patients while they're getting in network and sort of buffering their risk a little bit. They put they go all in on the insurance table, whereas that may be a very risky move in the long run.
Yeah. I know we're going to cover a lot of this. I'm going to save some of my questions for some of the other episodes. Wouldn't want this first one to be too full of golden nuggets.
That's
Is
right.
that the term golden nuggets? That just
That's
seems
it.
like a weird,
That's got to be the phrase.
that's a super weird term. Golden nuggets for Jimmy Zug. All right. So what other myths do we have?
All right. So the next myth is that you don't get paid as much as an out-of-network provider, right? This one kills me, right? Because an out-of-network provider is sort of like being 100% private pay, but also a little bit in the insurance world. So you're kind of, there's one foot in, there's one foot out kind of thing. And so with out of network, at the moment, what you're able to do is you're able to bill the patient for the entire cost of the session and have payment go to the patient for the insurance portion. Or you can bill the insurance, charge the patient for their cost share, right, for their copay, and then collect from the insurance company. And then whatever the insurance company doesn't cover, you can what's called balance bill or bill the patient for the remainder of the session. So I don't know if we want to take like an equation and some math
Yeah,
to go.
so I mean, so say say Blue Cross is going to pay $100 a session,
Yeah,
and you're not on Blue Cross, and you pay, your private pay is 150. You can bill the client $150, but
that's
they might get $100 reimbursed to them, or maybe if they have like a 80-20 split, they might get $80 or
right.
what. So they're not paying as much for private pay, but then you're getting the full amount.
That's right. That's exactly right. And you have the option to bill them for that difference, or you can just take whatever their copay or 80-20 split was and the insurance money and call it a day, right? You have a lot of flexibility there because you're out of network, right? You're not under a contract where you have to abide by the reimbursement rules, right? And we'll get to fraud and insurance audits later, but you're not under that requirement, right? So really does give you a lot of flexibility. It gives you the profit margin potentially of private pay, right? Of getting paid for your full fee. And then you also have the ability to tell the patient, I will courtesy bill, which is the colloquial term for billing the insurance company for your patient, right? You have two options there. You can, out of your electronic health record or on paper, submit the claim for your patient. That's called courtesy billing. Or you can issue your client a super bill, right? And your patient has to deal with that on their own. The idea that you would courtesy bill starts to sound like a luxury service that you offer, when in reality, it doesn't take that much time on your part as the therapist.
Yeah. Whereas if you are in network, you have to bill like to get paid. So it's
Not only
called bill.
That's right. Not only do you have to bill insurance, but you also have to collect the copay and deductible no matter what, right? And there are very, very rare circumstances where insurance will let you write off or forgive the copay or deductible. It's exceedingly rare. So if you're going to take insurance, you're right, as an in-network provider, you have to live by those rules for sure.
Awesome. All right. So what is our last myth to cover?
So I think our last myth, and we've talked about this, as far as shooting myself in the foot, but honestly, I think that this is the best case scenario. But I think there is a case for private pay. I think that on a lot of levels, you don't have accounts receivable to deal with, right? Which means you're not financing, the insurance company, right, until you actually get that cash. You get it in hand, and I think, Joe, you could probably speak to how good that feels, right? As far as like, I don't have to worry about what's past 30, 60, 90 days, right? I have it in my bank account. I think that payroll becomes a lot easier, honestly, from the side of the therapist. And maybe, Joe, you could speak a little bit more to that, or I could as well. But I think that that's a reality. I think that private pay enables you some freedom to do some quote unquote volunteer work, right? Or to get paid your full fee, right? Your full freight, and have a successful practice that way. So
Yeah,
I
I mean, I think for me, it's like to be able, because my practice was entirely private pay. It was awesome to just get paid, be able to pay the clinicians. They didn't have to wait on it. Way less to keep track of in regards to just what I, as an owner. Now, if I really wanted to scale, like that would have been harder because you have kind of a boutique practice, and we had 11 clinicians. But if you want to go way bigger than that, you probably have to add a couple insurances. But it's that point when I would have not been the one, just looking at the money, adding, bookkeepers and billers or things like that. So.
Right. Well, that's exactly right. And then I think that if you're passionate about staying with your insurances that you're in network with, but you also want to talk about strategies to develop, the downturn in insurance or what have you, there are examples that I'm seeing, and this is happening more and more, where practices are able to secure grant funding or private funding even for write-off amounts, for denied claims, for rejected claims, and sort of fills the gap of what they should have gotten paid but didn't. And those are becoming much more common. But I really do think that private pay, as far as headache with insurance, time spent for the clinician on billing, time spent for administrators on billing, and payroll, that is the simplest way to go, for sure.
Awesome. Well, if you have more questions for Jeremy, there's two things that you can do. If you head over to practiceofthepractice.com/Jeremy, you can schedule a free consulting session with him to pick his brain a little bit, hear a little bit about how there might be some ways to do things easier for yourself. Jeremy, who are the ideal people that might get something out of that kind of free call with you?
Yeah, it's a really good question. So I work with three kinds of individuals or organizations. The first type is the individual who is trying to DIY billing or credentialing and doesn't necessarily want to pay a company to do that. So I consult with those individuals on the process, what they need to have in place, and how to navigate that process, as well as troubleshoot along the way and provide ad hoc support for any glitches that might occur. I work with practices that want to either outsource their billing or insource their billing. So they've gotten to a place where it makes a lot of sense to bring the billing back in-house, and we need to know how to do that. How do we set up a billing department? How do we hire? What do we need to track or measure or project or what have you? And those are the profiles of the individuals and organizations that I work really well with.
Awesome. And then also on November 6th, 2019 at 3 o'clock Eastern, 2 Central, 1 Mountain, and noon Pacific, we're going to be doing a webinar all about billing. Jeremy and I are going to go deep into this beyond kind of what we're covering here on the podcast, and also taking a lot of Q&A. So you can register for that over at practiceofthepractice.com/billing webinar. And Jeremy, tomorrow we'll be talking all about insurance terms that you have to know. Well, you already know them, but
awesome.
the listeners need to know.
That's right.